to the Sunday pre-market analysis of Sunday the 13th of April. I hope you guys are, you had a great weekend. I had a great time in Toronto. Get to meet up with Amarjit and Adi. What a bunch of awesome guys. What a awesome couple of guys. I tell you, it's been a real treat for me to be able to meet up with you guys and chat, hear your stories. And you guys have amazing stories. You're amazing people. And it's such a privilege. Thank you to meet you guys and to hear your stories, see how the trading has helped change your life or what you want to do with where you want to go with trading. And yeah, it's exciting to see the journeys that you guys are on. And it's a privilege to get a chance to meet you folks. So awesome. I will be back in Ontario again, Toronto in October. So looking forward to seeing you guys again in October, see how much things have improved over the next 6 months or so. We'll see how this trading unfolds for you guys. With that, and Hadi, I don't know if you're listening to this right now, but if you are listening to this later, that book is, I thought you got me the book called Now, which is No Opportunity Wasted. But it's Now by Eckhart Tolle. I don't have that book, so thank you so much for that. Thank you for your wife for the cookies as well. Thank you so much. I hope Daniel's doing well. Have a great time, you guys. Enjoy your family. Sounds like an awesome family you have there. So I'm excited for you. Anyway, let's get to the markets. Just have a look at this pre-market analysis here. I'm sitting in a trade now from Friday over the weekend. I'm in profit. I'm just waiting for it to reach an upside objective. Ideally, I'd love to see it reach all the way up into here, into this upside objective here. So I think I'm going to, when I'm allowed to, I'll move my stop loss. Once the market opens up, I'm going to move my stop loss back up into this area, see if I can hunt for discount all the way up into premium level, and see if I can just hold it that long. So this will be an hourly chart, and I'm looking for 19,120 to 19,236. That will be the upside goal. Be my upside hourly objective. So I'll move that up to here as soon as the markets open up and allow me to make the move. So, but we're still stress-free and we're up 11 grand. So far so good. Let's see. I want to make sure I am online here. Once I'm in the base station here at home, everything seems to work quite well. So it's good. Shepard, good morning. Derek, well, we think you kind of amazing too. How you doing? You full time? Yeah, it's Derek, I can't wait to come meet you, man. I want to do a round of golf with you, man. That's going to be fun. You're going to be frustrated as hell. You're going to go, this guy, maybe he's a good trader, but he sucks at golf. But yeah, I'm looking forward to that. Looking forward to meeting more of you folks. It really is a treat, I tell you. Hadi and Amarjit, man, Amarjit's doing some amazing things with the money that he makes in life. Amazing. He's helping out so many people. What a joy. He's got such a great story. And Hadi just wants to help people. He is so excited about helping people, learning more, constantly learning and growing. And it's a real pleasure to have these guys as part of the community. So, yeah. Anyway, let's get in here. Let's look at, let's start from the top and work our way down. Let's look at the monthly chart. monthly chart. Premium box for weekly, monthly. I like that. Downside's already been taken. So if this is the swing we're looking for seasonal tendency, we want to see this start marching up for the rest of the month. Now just start climbing higher. We can reach up into 21,000 again. They're not super clean, but they're weekly. Get up on top of these weeklies. I like that. So looking for 18,878. 18,878. So this one I'm going to move up to 18,878. I want to see what lines up inside there for 18,878. And then I want to look for what lines up in 19,014. I want to know what lines up inside there as well. And I want to look for $18,272 to 18. Ooh, okay, let's go here. I want to know what was sitting inside there, inside those two sticks. And then I want to see. So basically what we're looking for here is to see if we can find something that coincides with these levels. Okay. I'm looking for something in the lower time frames that gives us these levels as areas to find support on to continue marching higher. So I'm marking these out as sensitive levels on the weekly level. Let me get 50% of the range is already done there. This range here, 50% is already taken, and we've closed above it. I like that. So I'm not just tapping it and I'm pulling quickly away. So let's get down into the lower time frame daily here. Let me just take these trades off of here for now so we don't have that distraction. All right. So weekly, why is this weekly one sitting right here? Ah, okay. I'm going to go with, oops. Daily. Okay, so daily, I'm going to get rid of all the 4-hour stuff right now and just work my way down here. That one I'm leaving on. All right, so here's we're working our way back up now. Okay, so %50 of that range. We have consequent encroachment lining up with a weekly level. Okay. Starting to get a picture. You guys starting to see a picture here? Hello, Hadi. How are you, my friend? If you've just popped on, thank you. Thank your wife for the cookies. Thank you for the book. It's I haven't read that book yet. I thought you were talking about Now, which is like that guy who does The Amazing Race. He wrote a book called Now, No Opportunity Wasted. So NAW, No Opportunity Wasted. So he talks about just take the road least traveled, get lost out there. You'll never know. Adventures happen. Things happen for a reason. You experience new things, and it's a great book. And yeah, it's called No Opportunity Wasted. Good book. And now the book you got me, which was Now by Eckhart Tolle. I haven't actually read that one, so I'm going to read that. So I look forward to reading that. So thank you so much for that, Hadi. I appreciate it. And your wife taking the time to make cookies too. So thank you. Thank you. So can you see how this is starting to form out now? If we look at the weekly, the monthly, we've got the monthly drawn liquidity above us. I think I drew that out there on the monthly. I did hope I didn't erase it. No, it's sitting right there. Let's send this all the way down to all time frames. So we see it sitting up there. Upside objective. Nice upside drawn liquidity in long term. So if we're looking for a month, for May to give us an upside, you think we want to start, we settle low now. This whole tariff thing has been put on the sidelines for the next 90 days. So if he's paused tariffs, we've had this artificial dip in the market. We've taken out old lows and we've created this reversal pattern. We've traded back into the reversal pattern. The bodies are respecting it on a daily level, and we're looking to push higher. Well, if you have an upside objective just inside this range alone, we have the initial breaker, this one here that takes out these highs, or this one here that takes out this high, then continues to go higher. It's the initial lowest one as an upside objective. We've hit that. Now, if we're looking and we've retraced back down to our discount box, and now we start to push back through, we want to see this level start giving way. Its mean threshold, I want to see it give way, and then find the consequent encroachment. We come back into one of these two, and then start pushing for buy side, premium. And then if we take that on the premium side, we're looking for the monthly, weekly objectives, and then the new daily objective, premium box right up here. So, oops. Let's do that one again. Now that could be pre-terminus, terminus, whatever you want. But that would be my upside objective. If I can keep this trade on that's presently on right now, I'm going to try and trade that. I want to try and practice trading long term. So I'm going to hold that now until I see a next reversal. So if I can catch here, pay myself at that portion there. And then if I can leave a piece on and let that continue to run for this premium level in May, that's my upside objective for the thing. So I'm going to try and hold this trade all the way into the first week of May. And that's my May objective up there. So we'll see if that transpires. So, yeah, I can't wait to meet your family. I want to meet that son of yours too. Sounds like a cool kid. This kid is like dialed. He's just like his dad. He's dialed into looking at the market, man. He's like, Dad, are we green today? Are we red today? Gets off school. He's 8 years old and he's like, so Dad, are we green or are we red? I love it. It's so cute. Okay, let's get back to this. So daily, you see where we're at right now. So if we pull the fib tool, and I'm going to disallow this one, and I'm going to go to the higher one. Why am I doing that? Because this is a bear trap. Okay, we're in a potential bear trap here where we come up into the breaker, kick off of it, roll, come all the way back down again. That's that one where people are going, oh, we're running for the highs, right? Well, you run into the breaker, you expect the breaker's mean threshold to hold price, right? It's low or it's open to hold price. And then you want to see, do we get a kick off that, or have we got intentions to drive right through that? And then if we do, then you go, great. As soon as we get above the body of that, I'm aiming for the premium array up here. So if you're paying a premium to get a higher premium, you want to make sure that this candle here gets taken to the upside on a close. If not, you got to wait for a discount inside this range. So if we're looking from here to here, you see, this is where that bear trap comes into play, and you got to be careful of these bear traps, man. Or bull traps, because they can be freaking killer. So look at that. We're right up into this institutional order, or a constant, the optimum trade entry reversal, up into a breaker. We're expecting to see is there going to be some resistance there, and we've used one candle to get through the low discount array, and then it ran all the way through the second one, third one, and the fourth one, all the way up to the objective. So you're going, I wasn't allowed to get on here, 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 or here. It ran straight through all of those. And if you didn't catch it on a lower time frame, you go, oh, I missed it. And how many people are just getting themselves all worked up saying, we missed this big reversal day, and, you know, and then the very next day it says, now that I've run to the breaker, I've hit some resistance, I'm looking for 1, 2, 3, all the way down to a discount portion to go higher. Okay, so here's, yeah. I'm gonna have to close my camera off so you guys don't have to see me munching away here. She's so awesome. I'm gonna close my camera off so you guys don't have to watch me munching away on my food. Anyway, you get the point. So what I'm looking for is, so when it gets up into this range, ask yourself this, you guys, when you get into this level and you're in a premium inside here and you haven't had an opportunity to get in on the trade yet, is there a likelihood, if this breaker holds, that we're going to come back into one of these? Now, typically you'll hear me say, wait for the very last one to catch it on a run higher, right? I always say, if that one candle runs through 1, it runs through 2, runs through 3, runs through 4, you take the last one and it should go higher. But here's the caveat on that. If it's in a premium portion of the range, you don't want to tap it. You want to say, you want to go for Derek's discount. So we want Derek's discount. So we say, if that's the range I'm in, I got to get below 50% for me to be interested in taking this long. So where is that? 50% of this huge range is right back into this discount box here, and it's actually lower than that discount. So you say, minimum, I want this, right? Minimum, I want that. You could say, I want 50% of this wick, whatever you want. Or you might say, as soon as it gets below 50, I'll take it. But then we want to make sure it doesn't close below here, because one of our rules is if it closes below this level, then all we've done is done an optimum optimum trade entry reversal in that high 79%, reverse and continue going obviously lower. So if a body does close below there, you go, I'm on the wrong side of this, and as soon as it trades back into it, I can get my trade off short or long, and I can turn it into a short and continue looking for lower time frame objective. Either first objective here, second objective is the mean threshold, consequent encroachment, or sorry, the rejection block. What happened there? Rejection block, then half the wick. Why is it doing that? That's interesting. Why is it doing that? Why does it keep clicking back? Anybody know what's going on with my charts? Why does it keep clicking back? I can't move it at all. Anyway, so you don't want to see it go, but you start paying yourself on the way down and moving your stop loss. As soon as you start hitting an objective, move to stop loss to break even, get stress free as soon as you can. Right. So what we're looking for here then is, God dang. Do you guys know why it's doing that? Yeah, that happens for sure. So for me, I'm looking at, now we've hit this discount box. Wait for that commercial to end. All right, now that we've hit this discount box, you look for, we have run up into this range, we've run up into the breaker, we've come back down to the discount box. Now, all those opportunities you wanted to get in, you now have them. The body is staying above this level, so you want to see that continue on. You do not want to see us close below this inversion fair value gaps low, 369. That's your no-go zone right there. If it closes below there again, you're on the wrong side of it. Wait or start trading back into this idea. Or if it just keeps going back and forth above and below it, wait for the high to get taken, or the 50% of this wick here to get taken on a close. So right now we've had that opportunity to load this trade on. So now we have this level has been hit. We've come back to the discount. Now I'm expecting to see a heavy run through here. So if we get a nice little entry, we're going to look on the lower time frames for an entry off of here for a long, and we're aiming for getting through this mean threshold. So previous day's highs, pay yourself at rejection block over previous day's highs. Mean threshold of this candle, 504. Look at that. Put that as an upside, a potential upside objective for you. It also lines up with the mitigation block down here. That the body lines up nicely with the mean threshold of that last up close candle. So I'll be looking for 504-ish there. And then rejection block, half the wick. And then obviously the upside objective, which is sitting right here for our premium array. Then what we're looking for from here is this will be first this is our first premium objective, or my first premium objective. Oh my goodness. I'm gooping up my my mouse is just getting gooped here. Okay. All right. So now I know what my bias is bullish this week, right? So I'm going to be bullish. We've got to get, now that we've got through this level on a close, if we can come back and tap it and continue pushing higher, you can do this bounce, bounce, bounce. I have no problem with these little up and down sawtooth pattern for this to keep marching higher, not a straight run. If it goes straight run, great. But if we see this on the lower time frames, just kind of marching on the 4-hour, 1-hour chart through these key levels, I'm all right with that. As long as we're still marching higher. My bias is long this week. Now, you got to look for, where's do I have confirmation on a long? I've got a reversal. I've traded right back down into it. And I've got a 4-hour continuation here. Now, it runs big bold candle. You say, great. If we run all the way through, we take the last one, which is in a discount out of the whole range. We come into that discount box, which is that candle, and we continue marching higher. So I'm looking for this level to get taken out now. Now that you've got this box hit, we run up into premium. You could go premium, roll over here one more time to get down into here. We did not get an opportunity to get in on this, right? So if this just taps this, rolls over and comes back down for Monday, hits this level and then starts to run back up again, where you get a little bit of consolidation, I'd expect no more than this candle's low, which is 17,042, or mean threshold right here at 1,700, big figure, we'll call that. You don't want to lose that on the downside. And then continue marching higher. Again, strength is if we get above this level here, find some support and continue pushing higher. There's nothing up here that's really of any value to me other than this fair value gap here. But if we find some support above here, pop back down, find support. I'm looking for a run above here and start moving for our upside objective on our daily. And this would be the next. So let's look at this next price leg here. If this price leg were to continue from here, where's my upside objective? Premium, right there. See how we take out that high? Right on the beezer. Just takes out that high. Next price leg, done. That's 20,540 or 554. I don't know about you, but that's 600 handles, 700 handles. That's 700 handles above us. You guys could get rich off of 700 handles, couldn't you? So if you're kind of mapping this out, and you're saying, this is my 4-hour price leg terminus, and I keep getting continuations because you're thinking, I want to try and hold this now long term. So I'm trying to practice my long-term holds. This is a seasonal tendency, so I want to try and hold this for a month. For not so much a mega trade, but it is longer than a swing trade. Usually a couple of weeks is for your swing trades. I would like to see this. It's a big trade, because if I can catch May's reversal, you can catch May's reversal all the way down into July, August. That's a huge run. That's a mega trade. Then catch July, August, run up into October or September, dip down into October, and then October's run into November, December. Those are the big trades for the year. So the big directions we're anticipating, barring all the shenanigans going on with political stuff. So 4-hour chart, that's our next upside objective on our 4-hour. Where does it line up for us? For then you have to ask yourself, do I have overlapping confluences that support a specific level? Remember that the bars we put in here on the weekly, we have a weekly fair value gap. We're looking at an inversion. We're inside that right now. So I want to see us get above that, and we want to see these 3 weekly points that we put in earlier on the lower time frames. You see how they're starting to line up. This one right here has confluences that are supported on the daily. The daily consequent encroachment. We have a 4-hour now consequent encroachment, and we have a weekly that overlap. So to me, I go, which level, if I were going to ask for sensitive levels, I would ignore this one. Through the process of elimination, I would use these two and this one here, because this one overlaps the dailies. This one here overlaps the daily top of the week, which is really this fair value gap extended. And this one here, I like it because it's literally overlapping the week objective, a weekly spot we're looking for, daily consequent encroachment, hourly or 4-hour. Now let's go down to the 1 hour, and I bet you we'll see it give us another nice sweet little entry there. So 1 hour puts us right in. Oh, wait a second. Let me just go back. Let me put that back there. There. Let me just put that one back there. I want to see that 1 hour look pretty good too. Yeah. See how now all 3 of those are all lining up inside this premium type area here. We have an overlap. That's a fair value gap right there, right in the consequent encroachment of the hourly SIBI as well. You see that? They're overlapping right there. Almost bang on. And this one is sitting right inside the premium array in the hourly here as well. So key levels from top to bottom, how I like to kind of just whittle them down and say, what levels do I anticipate are going to give us some sensitivity here? And those higher time frame draws, which are the weekly, monthly, and daily, do they have sensitivity at the lower time frame levels we're looking for? So no body got above it yet. Then all of a sudden, we have a body that breaks above this high here of this civvy. Look at how bodies come back into it. You find support at it, and we keep pushing higher. Inside this range, where's the BISI inside this range that tells me we want to see a higher time frame run from box to box? You could say this one's an immediate rebalance right here. It's inside this one. So I would take the larger range here, and I'd look for that little guy right up there. So in terms of objectives, as you start to piece this together now, we've got a bias for the week so far. And remember, that can change the moment we have a break in the levels that we're looking for on the higher time frames. If those start to let go, the daily 4 hours start to let go, then you got to be back to neutral or change your mind up. Don't just marry these ideas. Right now they look good. We're just looking for support that or confluences that support the idea that we're going to continue going higher. So anyway, I'm looking for this first one up here at 19,186 as a premium. And if we can get above that, that also gets us above our 3 higher time frame levels. Should now provide some support for us. The 4 hour, the daily, the weekly, all with our drawn liquidity above us. Okay. So for the hourly, inside the range. So where we gap now today, see how we're right in the middle of this range? We're in like, pull the fib from high to low. Look where we ended our week, 62%. We're just above the premium, or just above the equilibrium of the range that we're in from 12 o'clock to 3 o'clock on Wednesday's high. So I'd like to see a gap down. Why do you want to see a gap down? Because there's this level right here, this premium. If we can see, because see how the body here traded above it, and this candle traded back into it right here, and then left, you want to see that keep going. If we get one more time, we gap down, look for this level here to hold price one more time and start going higher. If it runs us out, you've got the mean threshold of that candle, which has already been hit. Yeah, it feels like it might want to just gap up and go gap up, come back down, find support at this and keep pushing higher and run into here. That'd be awesome. If it does gap down, I don't want to see it get any lower than this. Come back up through the gap, back down, tap the gap, and then continue pushing for a higher objective. That makes any sense? Anybody else have any different idea on that? It means another big blue buzz coming this week. At these big blue buzz. So 15-minute. We don't have any big fair value gaps here. There's small little tiny ones. But market structure shift to the upside, all three of them. Now you say to yourself, I don't want to see this candle, this candle, this candle, see these up close candles. and this one here get taken on the downside. So the last one, the highest one right here, I don't want to see the mean threshold get taken. Okay, so watch. You take this little, it's the parent breaker of the whole run. Okay, it's the parent breaker of the whole run. This parent breaker that takes out this low, it's the one that initiates this whole take out the low. Draw that all the way out. See how the mean threshold is not taken by the body. The wicks can do some damage. They still stay inside it, and they do not take out the low. Body changes above it, comes back. So you're looking to get in on this candle. Stop loss would be a tick below the low, or just below here, because you don't want to see this mean threshold give way on this candle either, this little propulsion candle. This you want to see as a breakaway gap. You want to see that continue going higher. When it first broke above and you saw that forming, this is your graded response. So in terms of A, B, C, D type trades, A plus, literally open and keep going. Just keep going. Doesn't even come back to this old low here. A level is your institutional order flow entry drill. Your B is coming back into the mean threshold of the candle, or consequent encroachment of the candle. A C level is coming down to 75% of this candle right here, like the body without a wick. That would have been a like C level, and D is a full fill, and you go, ugh, I don't want to see a fill of it, and you think that's great, just stay that little piece open and start marching higher, and it goes boop, come down, filled it, and came down into the open of that candle. That's your like D level. Line in the sand is your mean threshold, and if you start violating that, you wait. So lowest possible joy for a continuation to the upside, but it worked. You get validation above the high, you come back, find support at it, and then continue pushing higher. And there's that little fair value gap we have up here, which is that premium box. Once we traded through it and we come back into it, we want to find support at it and keep pushing higher. And now we've got that. You want to see this gap up higher, come back to fill this and go higher. Yeah, I don't want to see it gap down now. I want to see it gap up, come back down, find some support here, and continue pushing further. That's 15-minute. Okay. Oh, 15-minute. Let's have a look at where we're aiming for over here. So on your 15-minute chart, there's your premium array up here at 19. And there's those three boxes, the three critical lines that we're looking for on the weekly, and the 4-hour, and the daily, and hourly objective. So what kind of lines up in here? So now you go down to the 15-minute chart and say, what lines up in here? Well, that first one lines up perfectly inside the premium array in the 15. The second one lines up right in the mean threshold of the mitigation block that does not take out that high. That's all mitigation because it doesn't take out a high. So this is the last down close candle, most sensitive, right on the mean threshold. That lines up with that. And our premium box, it's a little tiny guy right in here. You'd expect it to run through that. The top of the 4-hour is right there. The top of this busy sensitive level. You see how those weekly charts all the way down into a 15-minute chart now, you're finding these extreme levels in a 4-hour chart. You can find these data points are still critical levels. You go, wow, they're lining up like bang on with some lower time frame objectives. Look at that. There's that weekly one again. You want to run out these equal highs here. That's that objective on a weekly that we lined up. The top of the daily puts us back into this order block here. Fair value gap here. And if we run that, then we've got nothing else left up here. Equal highs, away you go. Okay. Does that make sense to you guys? I'm kind of looking at a 1 hour imbalance below price that I would like to see come back into play tonight. The 1 hour, let's get back over there. What are you looking at, Derek? What are you looking at here, Derek? Around 18,588. This one. Yeah, we've really worked it. If we come back into this one, that means this little validation candle we had with this little premium box inside here. If you're going box to box inside the small range here, you're down here all the way up to here. You fill it, you come down again, you come back up, you finally trade through it, you come back and find support at that. For me, and this is just my idea on this, Derek, take it with a grain of salt. If we did come all the way back down to that level, that's a significant run through our support level. A significant run through. And this has been worked so much in here already. To me, the work's been done, right? It looks like it's been just hammered already like crazy. And now you finally got this. You're like, okay, when are you getting out of here? You finally break out. And you go one quick wick into here, find support. Now I want to see this continue pushing through this level. If it doesn't, you're right. If this mean threshold here of these three candles, if that mean threshold continues to hold price, if we don't gap up now, start working our way through this and finding support off of this candle on the hourly, then yep, if we roll over looking at inside this range, you're looking around 50% of this level here. And look at that, it's 18,576. So if you want to get down to 18,580, what did you say it was? 588 level, yeah. That will put you right into 50% of this small range here. Nice little discount to pick up for a run. That can put you right down to 544 and still be valid enough to go higher. So I'll split the difference with you. If I say to you, if we come back into this, if we do gap down lower, you don't want to see more than 50% of this wick right here get taken, which is 16,8 or 18,673-ish, somewhere around there, which is the top of that breaker again on the 4 hour. But, you know, if it is going to drop below this candle right here, now that it's been validated, if I drop below the mean threshold of this candle and I'm on a close on the hourly, you know, you got to start thinking what's down here at 50%, 62% that's going to support price coming lower, right? Is there a time for, is there an objective to reach for? Well, you've already hit this order block coming down. The only other thing we could reach for is the open at 566. So I'm with you, Derek. If we lose this mean threshold on a close, or if we gap down below this candle, come back into this candle, I'm looking for 50% or more. I'm with you on that one. Otherwise, I'm still going to be seeing how it opens. How it opens is going to be an important play here. That's why sometimes you just got to sit and wait for the open, or you wait for Monday to kind of give you the setup of where you think it's going to go for the week based on Monday's close. It's what we were talking about, Hedy, about waiting for, well, I think it was our Margit. We were saying, make your decision at the close of the candle on whatever time frame you're on. Don't make the decision while the candle's forming, because you'll get buffeted around big time. Yeah. Yeah, that's possible too. There's no news release. And it is choppy as hell in here on the hourly, so anything's possible in this kind of crazy market right now. Any questions with that before we go on to a different one? So that's kind of like where I'm going for the week. I think start thinking 50% or more of this range. If you start to break market structure in here and you start getting below 18,671, that breaker, market structure shift used for support, come back here, fill that in. You do not want to see that get filled. It loses its luster for me to go higher if this candle here starts to fill in. It's consequent encroachment. Sure, you can come back and take these equal lows out on the 5-minute chart. But that'd be it. I start to lose love for this. And if we close it and start to close below that, then look for 50% of this range, 62%. We're right on Derek's idea of coming deeper into the range. And if it does, look at the box to box. Look, this is the immediate rebalance right here. So you'd have to see that premium at, which is the consequent encroachment of the daily there, get taken on the downside, come back, find support at it, and start running deeper into this range. And I'm looking all the way back over here to 70% option trade into the reversal. Does that make sense? So some things that'll tip the hat that we're going to make a low for the week or a big wick down. That would be the downside objective right at the 70% option trade entry reversal. That would line up nicely with your idea, Derek, if we can come all the way down to there and then get a nice little reverse, change in direction, find some support and continue pushing higher later on during the day, either London session or early New York session, and start to run higher on Monday. Like Monday, literally set the low of the week. And then we just continue climbing the rest of the week. What do you guys think of that idea? So argue both sides of the market, say which one is the most likely, and what do you want to see in order for the most likely one to succeed, and where does it change in that? So you're literally building your fail safe now. Okay, so your fail safe is your idea about where you think the market idea to go long fails. Close that. Right? So your fail safe is where does the market change? But you know that first idea that we want this to go long, it fails. And you've got to save your money. It's about protecting your investment. If you're in a trade for a long, where does it fail? Okay, where does it fail? ES, let's have a look at ES. So if we're thinking bullish on NASDAQ, we're obviously thinking bullish on the rest of these guys, right? So we got, I don't even know when I wrote this terminus down here. I can't even remember when I put these in here. So let's just start from scratch. Same kind of idea. Okay. We've run through it. We've come back into it, found support at it, even with the wicks, and we're starting to push higher. Difference between that and NASDAQ's. See, NASDAQ's nice and pumped up right through it versus ES. We're still inside it. Okay. Above it, inside it. So for what are you thinking now when you're looking at this? I think I agree. Monday or even tonight, set the low for the week and then higher prices. My weekly target as of now would be 25.36 buy side liquidity and fair value gap weekly there. That's MQ, MNQ. Yeah. So your upside's 536, 25.36. That puts you in that 4-hour terminus leg. We're pretty much in the 590. What did you say? 536. First objective, premium box, and then these and that 4-hour terminus leg. I like that. That will be my upside objectives so far this week. If we can run harder, then I'd like to see these upside objectives get hit. It'd be crazy if we can start nailing that within 5 days. That'd be nuts. But hey, look, you take this candle and you multiply it by 5 and you're more than above that high there. Yeah, it's a crazy idea, but the markets are a bit nuts now. So keep this in mind. We have a level that is closed above our reversal. Again, I like it. We have a level closed above, coming back in, found support, and we're still sitting inside it. So what would you like to see? Tell me, what idea do you have? Are you bullish or bearish on this particular daily chart? If you're looking at the daily chart here, are you bullish or bearish with ES? $58.36 equal highs with weekly gap correlating. Yeah, let's start off with a monthly level. Oh, look at these little delicious guys down here. Do you see this lot? Okay. So we still have not, other than this breaker here, we've come back and tapped the breaker, this 3-month breaker that's run higher. We went from high to low, retapped the breaker, and then we're having a nice little kick off of that. Through this order block, we're staying right on the mean threshold of that order block so far. You want to see this just immediate rebalance. These are my upside monthly objective. We have this kind of just take these and go like this. And then go, where's my equilibrium on there? Look at that. Equilibrium lines up perfectly inside the little box. I love it. That's a beautiful overlay right there. So 8:58.39. What do you have at 58.36? Oh, we're almost like right on the money together there, Derek. I like it. I like it a lot. We're lined up, man. I like it when we're in sync. That's so far looking good. Let's look at a weekly. Oh, let's make sure that plays out on our visual all the way down. All time frames. Weekly chart. Where is our weekly chart? Oh, all the way up to here. You got to go from there to there. All these are bull candles in here, so treat that like a big old fair value gap. And it's weekly objective. That weekly, its consequent encroachment, the monthly consequent encroachment, and that so we got, you see how this level now becomes an important eyeball I'm looking for. We have 3 levels that overlap the same data point. Now let's go into a daily. We have a breaker. That lines up perfectly with the top of that first fair value gap we saw on the weekly or the monthly. Look at that. Nice. Daily inversions, daily premiums that we're looking for. This is the premium box inside the range we're in right now. It's a premium box hunt. Keep in mind mitigation block here, unless you're looking at this little swing here that gets taken out, then it will be a breaker. But you know, this candle, if you find some support off of that, which is inside this imbalance, that rolls over and comes back down again, you want to see these 2 levels hold. This premium here, all the way up to there. So your upside in terms of range from high to low, where's your discount? So you want to pick up a discount back down in here. If we open up, come back, give you a little discount below 50%, cash out on the run up. If it closes below here, you're on the wrong side of it. But any entry in here, so I'm going to keep that on there. We're looking for an entry or potential reversal on a Monday, coming back into this candle's wick. And this open here, one more time, tap down in here. No more than 50% of the wick that was just delivered yesterday on Friday. yesterday, on Friday, and then push higher. That's my thoughts there. Let's see if we can find something as we start to drill down. What is down there that gives us that kind of support level? So 4 hour, top of the box. We're looking at 52.83 on a 4 hour. 52.83. That's right in the top of these old highs here. So if we come back down one more time into 50% of this wick, catches these old highs one more time, just give it a tap, start going higher. Or ideally, now these two candles are validated, you don't want to see the open on the candles at 53, 58. That would be nice to see it stay open. Now if the next candle comes down, taps this and leaves, there's a small little fair value gap there. You see that? You want to see that stay open and start pushing higher. So graded response all inside here. You could allow it to come all the way down into this candle here. And then you want to see it get through the premium level, which is inside this range. $53.38. What did you say, Derek? 53. Did you give us a level on that? So I'm looking for this level again. If we get a retracement back into here, I like this 53.38 level. If you come back into that range one more time, bounce off of 50%, start going higher. 50% will give us right back into this candle's open. Mean threshold. There you go. Everything's kind of hindering on where the open's going to be right now, right? Where's the open? Where's the gap going to be? That's the 4 hour. 1 hour. We have box to box level. You see that? 1 hour box to box. Let's go boxing. Let's go boxing. Like I think Ollie was saying, if Monday's no news event and we're just going to go wandering around in here for a while, if we just kind of bounce up and down here, just kind of run up and down and go, and we just bounce between premium and discount, you might catch yourself a nice little box to boxing, 6-round, 7-round boxing event going on here inside this consolidation until we see a breakout above the high or a breakout below the low on an hourly level. You can catch yourself a nice little premium discount box. So all the time you're finding support off of this level here, and it comes back into the range, boxing. Start doing some boxing, box to box. Inside here, you've got this little box above you here before reaching for the discount one down here. And then another one that's further down is right here. So you've got 3 levels inside this guy here, and you got the premium box above you. So that'd be fun. That might be a couple of little fun trades in there. Are we in agreement with that? Anybody else have any ideas? Bullish with that. I'll need to be offsetting up the honeybee hives this afternoon. Ooh, excellent. Derek, I tell you, you're gonna have to set up a little website here, and we're gonna get some honeybee sales for you, man. We're gonna buy some honey. I'll even import some of your honey from the States. I'll probably pay a huge tariff on it, but Derek's honeybee tariff. But you're worth it, man. I'm supporting you. You're worth it. Unless it's 100% tariff, you better be charging me $1.50 for your honey. Need to be off. Wait till you see the 1 hour fair value gap. You are just gonna love it. 36 fair value gap 336. Yeah, so you want to see this right now provide support. I like to see this breakaway gap starting to hold price now. We've come above this level. So insert in terms of premium discount, and see how this little range here, when you're talking about boxing internal, at least small little internal range liquidity hunts, there's the discount box, there's the premium box. You go from discount, bodies respect it, discount, premium, premium, discount, discount, premium. Then it finally runs through. You go, great, now it's extending the range, taking out that high, comes back, gives it a little kiss, extends the range higher. Now you want to see this continue pushing higher into the premium box above you. So you're going from box to box, or box, 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 and then finally run up higher. But you can see the logic between those levels. Very clean, very logical, found support at them, continue pushing higher. So once you break this high, you're looking for this high and these wicks now to provide support to go higher. So body breaks above them, we come back to the wick and we start mushing higher. So I'm looking for this to go higher for sure. Right now, if we start to close below this thing, I'm looking for this box. If we close below that box, then we're coming back deeper into this range, and there's really not much back here except for 49.30, and that's way down there. So I'm not bearish, I'm bullish right now until proven otherwise. So super bullish if we can get above this high, use it for support, and then we're looking for higher prices there in ES. Do any of you guys know Hitherman? HITHERMANN. She's managing a $250 million sports fund. She's following us. That's a good thing. We're also attracting some big players. I like it. I like it. She's a big Bitcoin trader, I think. She teaches a lot of this stuff. Got lots of followers, thousands of followers. Dow Jones. What do we got from Mr. Dow? Let's start off on our monthly. Same thing we did before. I got nothing in here. I got nothing there on the monthly. Weekly. Oh, wow. That's interesting. Are you guys looking at what I'm looking at? With that, I'll need to okay, Derek's out. Enjoy your B-day, man. Enjoy your B-day. Enjoy your bidet. Enjoy your B-day. Not your bidet. If you're sitting around on your bidet all day, I say there's something wrong with you or your bidet. But have a great B-day. Do you see this right here? My area of concern is here on the weekly. On the weekly. specificity, I would say it's more of a price imbalance. It's an old price imbalance. Been rebalanced and stuff here, but you have to include this. If you include that, you have to include all of that. So I wouldn't really be super bullish in Dow Jones, but if Dow Jones is being lifted along with the other two, then you're looking for this premium box above you here. Premium box. Okay, Hadi, take care, buddy. Good to see you. Thanks for popping in. I don't know how much longer I've got in here anyway, so I've given my NQ. Yes, I think we're all on in sync for going higher this week. Looking for an opportunity to catch up for a higher run, so we'll see how that sets up today. We're looking for a gap up today, a gap up. Gas. I haven't got much. Haven't got much for gas. Probably more downside for gas. We have to get back through this mean threshold, 1897. Back through this level here. We can use this candle for some support. I'd like to see us push up higher into here. But otherwise, if this rolls over now, we're going to come down even lower still. Gas. Copper futures nailed our box nicely here. Now I want to see if we get through this level. Start moving higher. Okay. I see you. 826. Yeah. Look for 50% of this range here now. Upside. Consolidation. Cam model off the bottom of that. If that holds, we'll see if that holds. It comes back down. You want to see it get below this level and then start pushing for the next price leg lower if it's going to drive lower. Or if we're going to go higher, I want to see us eat through 50% of this wick or this consolidation on a close. Use this level as support and start pushing higher. Remember, if this is a seasonal tendency now for markets to start switching up on us and start to go a little higher into May, after taking a low, I want to see this level here in natural gas get closed above at 372 on a close. Find some support at that and start pushing back up into 399 all the way up to 413 or so, 418, 425. And wheat hit our upside objective we were looking for. Nailed it. Soybeans hit our upside objective. Nailed it. Right there. Tap it. Go. Take the high. Extend the range. I want to see now We can get through this level. My next level up is going to be, see if we can find some resistance now. I'm going to put these sticks up here now. If we can get above that one, well, you'd have to use the other one on top. So we're looking at this level here and that stick. If we can get above that stick, then look for these equal highs to get taken and look for the high above us. In soybeans, still stuck here in sugar right now. I want to see that roll over and come out down lower now in sugar. Use this gap here as support to come lower. If we can get above this level and take this candle out on the upside, I'm looking for relative equal highs above us and then a run back into this consolidation above us here on sugar. Coffee ran right into our sticks. Nice. That's finding support, Looking for range extension now. I'm looking for these highs to get taken out here. So I'm watching for these. And look for this gap right above you here. I'm looking for that. It's the next upside. For coffee. Live cattle. That's a tricky one. The tricky one. Upside. I want to see this candle's open. That's it. I don't want to see it getting lower than that. Come back, find support at it if you like. I don't see any body get there. You need a little wicky action in there, but I don't want to see any bodies get below that candle's open. Friday's open candle. Corn has hit our upside objective nicely. My next upside objective in corn is going to be, not that I buy corn because it's not on my list for exciting ones. Right there, look for premium box up here. And little piggies are still in the barn. Crude oil. Let's have a look at crude oil. One through here, no close below here yet. I don't want to see any close get below here on a weekly. I don't know why I even mark these as inversions. They're just areas of sensitivity. I don't even know why I put this stuff on the end, just like weekly level of interest. Okay, so see on the weekly, we've got lots of relative equal highs above us, like around the $78 range. We've traded below this low. This whole consolidation here, we've now had a displacement candle below it. We've come back into it. We've tapped it and had a reaction off of it. Dropped all the way down here and then came back up and froze here. So if we close below 60.24, we're coming lower. Like this seems to have set a price that we want to reach for. There, draw it across. Right on the money. This box. So I don't like to say it, but oil looks like it has potential to poop the bed here. This could be a bit dodgy. See you tomorrow. Have a great day. Just seen TV. I think it's going lower. It never came down to a discount on the yearly range. Should. Don't know why the link is not formatting. It's been accurate for the last few weeks that I've been using it. What link are you talking about, Glenn? I'm thinking this could go lower, you guys. Where now you just start to look for confirmation of the fear of going lower. So let's look at the price leg that's forming here. If this price leg holds, and we retap the low here, which we've done right here. If this becomes that, puts us right in 46 bucks. If we go to the top, if we go to an institutional order flow entry drill, that puts us right on consequent encroachment here. Like if this runs up here one more time and just taps consequent encroachment, which is also the bottom of this candle, we have an institutional order flow entry drill for a continuation on the downside. Oil could drop another price leg low, and we're looking at 46 bucks, which is just right in this low. Now some people will go, well, you're nuts, man. There's not going there. Yeah. I hope I'm wrong. I see nothing right here that says we're going bullish right now. So if we do go bullish, I'm looking for that level, and I'm looking for a reversal here. Right now we're just sideways. So now you go, all right, we either going to start booking it higher. What do I need for this to get higher? I need to see us close above that level, and we've been above it, below it, and now we're right back in the middle of it. So again, I've got nothing that says we want to go super bullish yet. Like if we're going to go higher on this, you would have imagined that would have gone above right here quickly wick get back into it and then take off. Like yesterday or Thursday would have just come back, put a wick in there, and then start running. See how the mean threshold of this has even been closed below? We're just tapping back into this level. To me, we could just roll over right here and start coming lower. And if that is the high right there, that becomes, we're reaching for the next price leg lower. So I'm going to put I hate to say this is like that's uh-oh. So I want to see us climb above this, find support, take out that high and start marching higher. Start eating through the mean threshold of this candle and that old low. So if we start to march through here, find support and start come back into this range, I'll pull the fib tool on this range and start trading it like it's going higher. But if it suddenly reverses and gets back through this level and finds support at it, I'm looking at 1, 2, 3 downside range expectations for oil. So 4 hour, what supports this coming up into that daily level we're looking for right here? Yeah, this is the daily level, so I don't know why that's sitting there. Right there's where I'm looking. There. What's that level? 4 hour. What supports my 4 hour idea that we're going to go higher for now into institutional order flow entry drill on a weekly or daily and then go lower. So here's another one I want to see. Find support at 6107. And I don't want to see this fill. 6107 and leave. So gap down, fill this, start running up, use the gap to go higher, take out these highs and aim for this objective here and see how much we dip into this range. That'll put us right above 50%. That's the premium. And then start running it out, come lower. Again, I want to see if it gets below here on sometime on Monday, if we're doing a big heavy push down now in oil. If we're doing a big run up, I want to see these levels provide support. So I'm looking for a run higher for the time being into this level. And the high for the week to be set somewhere in here and start pushing lower. We start getting through that level on a close. Changing up my mind. Right now we're bullish. We're bullish into this range. But overall bearish until we get through that level. How's that? Does that help? Don't know why the link is not formatting. It's been accurate for the last few weeks that I've been using it. I don't know what link you're talking about there, Glenn, but let me know. Glenn, you don't happen to be the brother of my acupuncturist by any chance, do you? So anyway, I'll leave that on there for oil. Where's the hourly? Let's see where the hourly's at, and then we'll see if there's any confirmation that we're going to go higher inside here, if there's anything that's going to hold us back for this run. Man, you can't ask for more precision than that, man. When you see that, you just cannot unsee it. It's so freaking obvious. This wick right here on the explosion up would have given you a perfect entry right there. See that little fair value gap? Boop, right on it and left. Takes out the high. You don't want to see the mean threshold get taken. See how the mean threshold gets taken? Where are we coming? Deeper into the range. That's why that you see me really getting quite animated when it starts getting down to this mean threshold. You want to see us tap, go, tap, go. Mean threshold, oh, that's the line in the sand. Tap it and go. The body better not close there. It does, and you go, oh, we're coming deeper into the range. Look for 50% of that range, and you'll see 50%. You ran below it. They got another new inversion here. Traded back above it. Now you're back inside this range, and you've really got nothing left in here. So I want to see this start pushing higher. So you expect to see a continuation moving higher in this one now. You got relative equal highs above you. We're going to come back and see those. That's that setup that when you see this kind of thing happening, that's telling you that sometime in the future, that's going to be the next reach for liquidity. So higher in oil, and then we're going to be waiting for the potential for the drop. You want to see oil really, it's on its last legs, desperate to stay high now. If you roll over here and start taking out these lows, then it's starting to shift full on bearish for a while. Glenn's not going to answer my question. Fair enough. There's only 6 of you left. I'll be done shortly. Love it. Tight little range. Now you got to wait for a breakout above or below these levels here. You got relative equal highs above you. Slightly jagged level down below you here. So you want to see it roll over on that and then start coming back for the liquidity run back at 32, 34. Let's see if it stays above this level. Minute chart. You can get below there. You're targeting down in here. We get above this level here. That's my upside look for gold. And what else we got here? Still looking for this downside box in natural gas. If you roll over and get back down into here, see if that holds price. I don't want to see that start giving away. Then you're looking for much deeper prices in gas. And if oil continues to drop, then you're looking for runs on the liquidity below you here and runs all the way down into discount boxes like way down here. Which would be a nice little deal to pick up. Bitcoin. Got a reversal here in Bitcoin. So looking for close out all these things, settings. Get rid of all this. I do like this here in Bitcoin right now. With an upside objective. And Bitcoin up right here. Watch for this. Watch for that line to get hit. Got to get above here. Look for that. If we don't, and this turns into a bear trap, look for a low below here. If we get below that, I'm looking for a run deeper into this range. This will end up being your bull trap. This will end up being a change in delivery in terms of little market structure shift, and then a continuation on the downside. So this would be like moving into a market maker sell model. Takes out that little high. You start to see it roll over now, come back lower, take out that low, take out this order block breaker right here. On the downside, find some support at that. Then I want to see second stage distribution and a unicorn trade in here for a short. We go back above this level, look, watch for here. If we get above that level, find some support, then I'm looking for old highs in this premium box here one more time to get hit. So that's what I'm looking for in Bitcoin. Too much. They're not going to leave. This is just way too much liquidity down here. They're not going to leave that on top. So me, I'm just waiting for this to give me another leg down into here. And reverse engineer this. This is where you kind of expect to see if there's a huge reverse back into this range, what premium level it sits up here that supports that as a run to here. If this is the next price leg, then I'd be looking for something like this. Price to get all the way back up into there. So price runs into this premium box. That hits that premium box there on the way up, rolls over and comes back down again, takes out this main threshold here and this discount box over here. Discount box. I want to see it like a run up, drop down into this. So I'd like to see something look like this. Go up here, down here, up here, there, down, up, down, up. that kind of idea. And we could see this into May. If we bottom out in May, look for this kind of run down here. It could be just 1, 2, 3, and then come back down. Whatever. If it's just going to be a slow, I'm just looking at key levels that we bounce off of them, come back down through them, come back into them, into them, into them, and then start pouring. So I'm just looking at these key levels as finding support to work our way back down if this is the objective. Now, I could be completely talking out of my ass for all I know. It changes up. This whole thing just goes to delete if I get above this premium box here. Take these equal highs, then forget what I'm saying. We're going high. I just don't think they're going to leave those untouched. There's too much liquidity down there. Do not run down there and take them out, especially when oil and gas, you're expecting them to go lower. This pay-to explorations. As price of gas goes down, exploration isn't as lucrative. Nobody wants to pay for oil that's not producing or not paying cash, and you're paying lots of money to set new wells. So this would die out, I would imagine. All the time oil's under the weather. And if oil does go down, then I'm expecting to see this drop. Mosaic, nice little catch below the low. If you caught that low, you've made more than 10% on your money already. To me, that's a nice little golden ticket. Move your stop loss into break even, take a chunk of your trade off, and wait for a premium array to get hit. If your premium array gets hit, another $2, it's 20% return on your money in a couple of weeks. Move to the sidelines, have some fun. You've just now made 20% on your money. That's more than you'll make in dividends off of that stock for the year. For several years, and you've made it in a couple of weeks. So you could say, I just want to try and get 10% out of that trade for a year, and you end up getting in 20% in a couple of weeks. Move to the sidelines, keep your money safe, and you say, well, I've collected my money for the year off that trade. Let's see if the banks have a similar level of support. Got to get above here, got to get above here. Still discount, still dropping, still dropping. It's the only one that's got some improvement right now. Still dropping, still dropping. Looking for sell side in Disney still. Looking for care about United Airlines. Russell's out of that. I'm happy for him. Ford, they dipped into our level we're looking for, our monthly level. So I'm looking to start here. Just denied me my entry price to start buying, layering in on buying Ford. But you think about that, you know, if you're buying Ford at $8.48, you just got to get 84-cent return. So that's like what, $9.43. So that's almost 10% return in 2 days off your stock that is now paying you 30 cents every quarter. So that's $1.20 a year. $1.20 on an $8 stock is more than 10%, like 15% return on your money just in dividends. So if that's like you're catching a stock at a great low, not that I'm trying to convince you to buy Ford, I'm not. I'm just saying, to me, that's a nice, makes sense for a long-term hold on that. And I don't listen to all the fluff and bullshit that goes on out there in terms of fundamentals and stuff. Ford's not a company that's going to die overnight. So they got lots of relative equal highs above us. Not that I'm giving you financial advice, because I'm not. That is not advice. Apple, look at the box we had down in Apple. Nailed it. So from 170 to 199 right now, 198, that's $27. That is more than 10% return in a matter of 3 days, right from the box I gave you here in Apple. Here's Stellantis, right in the middle of that, 887. Pays 76 cents a year. So just shy of 10%. It's around 7 or 8% return on that. Pays yearly. Equal lows below you. There's nothing that tells me that's bullish yet. So I know you're not going to like to hear this, Gary. You're probably not listening to me anyway. But if you were, you're not going to like this. He's like, no way. It's never going to get down there. It's never going to get there. Never schmever. Never say never. Load up the bus. $1.06 every 3 months, or every 4 months. July. So every quarter is $3 and some odd cents. So you're getting 5%. Is that 5%? $3. Just a little more than 5%, 7% or so. And then look at that, just for another run back up here. Now we've got this market, or you've got this market maker sell model, taking out the lows in a level that would be awesome to buy. Then you're looking for a higher run and nice discount, like every $5.80 is 10% return on your money, not to mention the dividend they're paying you. That's a great place to hold that stock for a few years. So anybody have any questions before I leave? I would like to see this return back into this level here before going higher in British pound. I'd like to see that level at the 129.42 to hold price and go higher. Canadian dollar, look at you taking off like a rocket, like somebody's slapped your ass, you're off a race. Look at that. All this time they've been stuck in that consolidation. Now all of a sudden we're getting some lift. About time. Look at that. Japanese yen. Go for it, yen. It nailed our box. We have called this whole currency all year long. Right from the beginning of the year, we gave the downside right into December. Downside objective was hit, and then these little upside boxes finding support, the holes in the walls, as it were. We're finding support at those, finally hit our upside goal, and now we've encouraged yen to get up here, and look at that. We're way up there. I haven't been trading yen, but if you're trading that currency based on what we gave you this from the whole year right now, that's moved up 7 cents. 0.7 of a cent or something like that. Like a whole 0.10, hundredth of a cent, thousandth of a cent, whatever. Anyway, it's done quite well. Good return. Japanese yen. Silver. All right, we've nailed both ends. We've nailed the data points perfectly in silver. Look at that. We had that up there. If you've been following the show, you would see we've had that up there for weeks, if not months. We've had that level up there. Would have been back in February. So yeah, months we've had that level as we were aiming for it. We finally hit it perfectly. Then we had the short term, and then you have all these discount boxes that we reach for. Ding, 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 all the way back down. Perfect entry. Key off of it. Old high. You're running back into this range here now. So you're looking for daily levels. If you're into silver. And I like this. You look at that, 26 bucks, and it's already at $29. Another 10% return on your money. There's deals out there to be made, my friends. There's deals out there to be made. So you're looking for this. And it happens to overlap perfectly on our level. So I'll be looking for somewhere in 29.88 in the next couple of days. Let's see what kind of response you get off this breaker. All right. That's it. Any questions? Anybody? 7 people left. Nobody else? Okay, well, that's it for me. Thanks for tuning in, you guys. Thanks for putting up with my little market analysis. You got my ideas for the week, and you got my direction for the week, and you got my reason for why I want that direction and for when it's going to fail. So if you don't know where it's going to fail, go back over the video. We'll talk about where our fail points are, our fail safe, and I'll see you guys bright and early tomorrow morning. We'll see if this thing turns out the way we want it to. I'll be on the Telegram channel here as well. So if the open today goes the way we want, then we'll start getting in on potential setups and trades right this afternoon around 3 o'clock Canada time. So we will see. Until then, you guys have an awesome rest of your weekend. I will see you bright and early tomorrow morning. You take care. See you there.